Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities and the E-mini S&Ps. Another day, another new high. Not too long ago, we were talking about trading around the 50-day moving average, right around 2450. We vaulted off that, trading about 50 handles higher, and seemed to put a little distance between us and the norm. Recall over the last several sell-offs, we'll call them, if they're as short-lived as they were, we do tend to gravitate towards the 50-day moving average in the E-minis when we see a sell-off, and then we bounce off it to make a new high. We did that in May, we did it in June, we did it in August. And I think that that's kind of a key, is when we get there, it depends on how long we're going to wait, and we wait for whether it's economic news, whether it's geopolitical unrest, whether it is some new fancy iPhone that's coming out, whatever it may be that the stock market is looking for, demand for yield, even, that's typically where we wait. We wait at the 50-day moving average, and then we vault higher like we've done. Now, what has that done to volatility? Well, the VIX index obviously saw some pretty heavy spikes and movements along over the last month or so with the way the stock market had been trading, and it now is back near the lows that we saw late last week, and likely on its way back to 10 or lower, a level we haven't seen since early August. So that's kind of a non-event. Now, what do we have on the calendar for the rest of the week? Well, we've got some CPI, we got retail sales. I think the market will probably shrug those two numbers off unless they're way off the charts, and all focus now will shift to the FOMC meeting on September 20th. What will the Fed do? Will it be a balance sheet announcement? Will it be some kind of forward rate guidance? What will it be about the economy that the Fed sees? And I think that will be pretty much the biggest news item on tap for stocks, at least over the short term. And that's pretty much what I think the greater macro market is looking for, is what will the Fed do, or what will they say they will do, which sometimes is the best case for the Fed. So right now, stocks still soaring high. We put a lot of distance between us and the 50-day moving average. Doesn't mean we can't get back there soon, but I don't think we get there before FOMC. And I think we're probably going to kind of find a little place to hang our hats here for a while. If we don't go higher, we're probably just going to trade sideways from here. This is Todd Colvin coming to you from the floor of the CME Group.